Why is Dr. Copper an indicator of demand in the world, indicating that happy days are back? Why is crude surging? Is it China or fear of a full-blown recession that has melted away? Peter McGuire, Chief Executive Officer with XM, joins us live from Australia. And you've got David Lennox, represents resource analyst at Fat Profits. He also joins us now. Peter, good morning. Thank you for joining us.
Good morning. Lovely to be here.
Well, if you missed the World Cup, well, there's one on in India right now, the Hockey World Cup. And this time I've been told that India's favorite, not Australia.
Well, it wouldn't surprise me. You guys are very good at hockey. So don't be surprised. I think we'll go okay.
But I'm surprised with what's happening in the commodity market. We're talking about recession. Yes. We're talking about slowdown. And you got crude, which has popped right back up, and copper, which is up more than 10% this year. What's going on?
Well, I think first off, yes, copper's really embraced the opening of China, and it's galloped away from, it was, I think, overly sold and very, very soft as far as price. And now we're looking at the best part of nearly 9,300 a metric ton. So it's put on a big move to the upside, over $1,000. And as far as crude's concerned, again, it was pushed underwater. It was very, very soft. And with the US dollar coming off as heavily as it had, with the issues as far as production and OPEC not really changing their mind frame, then with China reopening, it's been all steam ahead, and crude's up the best part of about 10 or 11% in the last 12 days. So yes, it's been dynamic, and I think there's further upside yet for it.
Peter, let me throw in one more ingredient in the melting pot. It is not the World Cup. It is not China. It is not recession. It's the dollar index. 115, my friend, has become 102. What do you make of that?
Well, from a trading perspective, it's been absolutely mind-blowing what we've seen against all of the cross rates and that US dollar sell-off. I mean, it's just been an incredible time to be short dollar, long all the other currencies, and traders are rubbing their hands with glee as far as what sort of profits they've made in the last few months. Now we're getting to that inflection point. Are we going to see a 101, a stamp through 103 very, very briskly? We're now sitting at about 102.80, 102.85. I think it's got the potential to probably edge lower. I won't be surprised to probably be at the 101 handle sometime this month. And for a little bit further softness, uneasiness as far as what the Fed's prepared to do, and probably an increase in rates for Eurozone and the likes of the UK. Japan has backed off. They're not going to raise rates. So there's the storyline, and a little bit softer for the US dollar yet.
Do you think the markets are getting a little exuberant too soon?
Well, they're certainly not. I don't think they are in equities. If we're looking at commodities, if we're looking at currencies, yes, we've seen exuberance with strength to the upside for the euro and yen and pound. But if you're looking at commodities, there's some commodities, gold and silver, have performed extremely well since October. Oil and some of those base metals have rallied nicely since the start of the year. But there's really, they were oversold in many ways, and we had to wait to see when China was prepared to open. I understand their numbers. I understand their Lunar New Year commences this Sunday, so there'll be a quiet time for the best part of 8 to 10 business days. And it's like anything when you deal with these markets, they become toppy or they become soft. And at the moment, we've had a big move to the upside. I wouldn't be surprised to see a little bit of consolidation. But the overall theme, building on what David said, it's stronger from here, and I won't be surprised to take a $90 handle out very soon.
Hypothetically, if you have to just make one trade for 2023 and you want to go on a long holiday, but you're convinced that you will not look at that trade for next 6 months, what would be that trade?
I'd probably short equities.
Ouch. It's the stock market channel, Ouch. Sir, you are on right now.
I know. I'm just looking at, I think the recessionary fears are too great, and I think that they're toppy at the moment for US equities, and I would be, I'd be looking at that. I think we're in a very complex global situation at the moment.
So Peter is specifically talking about going short on US equities. I'm just want to qualify this for our viewers. He's not talking about going short on Indian equities. David, what will be
US equities?
Yes. I wanted to get that underlying point out so there is no confusion. The gentleman before you
Yes.
came on the show said markets are going higher this year in India, so I hope that happens.
Yes, I think India is different in the sense where its demographics. You've got a very young population. You've got, I think, more upside over this decade, and I think the US equities are fairly well priced. I don't know if they'll pull back 15% or 10%, but I think that I would be looking to short equities more than go long. US.
Peter wants to come in with his one big trade for 2023. David, Peter, gentlemen, really appreciate your time. Thank you for joining us. And Peter, remember, World Cup. India is winning this time.
Yes, you probably will. You guys are too good.
Guys, really appreciate to have you on ET Now, and really appreciate that you could accommodate this interview request. I know it was late minute, but the fact you found time really means a lot to us.
Thank you very much.
See you later.